welcome back to Crypto Saving Experts, where we talk about the latest cryptocurrency news and take a look at the markets so that we all know exactly what is happening. My name is Jess and we do these live streams every single weekday. So if you are new here, please make sure to like, subscribe and hit that bell notification button so you don't miss what's going on here. We have a lot of news to be discussing today. We're going to take a look at what's going on with the Bitcoin ETFs, whether they are slowing down at all. We're going to be taking a look at the Ethereum ETFs and the likelihood of that. We've also got an astonishing Bitcoin price prediction from Cathie Woods, the CEO of ARK Invest, and we have some news on crypto wallets and what's happening in the EU when it comes to regulation, because I've seen a lot about this on crypto Twitter over the weekend and I want to address that and discuss what this means for crypto. So lots to discuss today. As I said, please make sure to like, subscribe and hit that bell notification button. Good morning and afternoon to everybody in the live chat here. Bruce, Crypto, Cody, Jason, Crypto Cody again, PG. Thank you very much for tuning in as always. Let's take a look at what's going on here. So let's refresh this page. First of all, Bitcoin is up 2.72% within the last 24 hours. We are back above $67,000 and Ethereum is up nicely at 1.9%. $3,450 there. So within the last week, Bitcoin has outperformed Ethereum. We did see a little bit of strength on the Ethereum Bitcoin chart towards the end of last week, but we have seen a little bit of a retracement here on the daily chart. You can see Bitcoin is really holding its power here and holding its dominance as well. If we take a look at BTC.D, you can see that Bitcoin dominance is incredibly strong for this point in the market. It's midday every day. The stream's been at midday for the last 2-3 weeks, I would say. Let's take a look at what's going on here, though. So in around the previous halving, Bitcoin really started to lose its dominance around September 2019, and the halving was in May 2020. So we're looking at around 250 days before the halving. Now, we haven't really seen that here. We've seen the Bitcoin dominance stay between around 55% and 50% since back in October 2023, and we have that halving coming very, very soon next month, and we have not really lost too much of that dominance. Now this, I believe, is off the back of the Bitcoin ETFs. This yellow line here represents the Bitcoin halving coming up. Off the back of these Bitcoin ETFs, we've seen a lot of money flowing into the Bitcoin price, and we have not seen that flow into the rest of the cryptocurrency markets, hence why we are seeing the dominance hold so strong. But let's take a look at what else is going on in terms of altcoins here. We've got ICP up over 22%, NEAR up over 11%, and in terms of biggest losers, we've got eCash down over 7%, Stacks down over 5%. So some volatility in the markets to say the least. Overall, within the last 24 hours for the top 20 tokens, we are looking pretty green, but if we look at the last week, we are looking pretty red. So maybe we're at the start of a bullish trajectory, or maybe this is just a little bit of a cool off period before we see lower prices. I want to go into detail about that today, so let's pull that up on the Bitcoin chart here and see what is really going on. First of all, on the daily chart, we did get as high as $73,750, and since then we have got as low as $60,800. Now, if we take a look at the percentage decrease there, we're looking at around 17% pullback. If we take a look at pullbacks in previous cycles, we do all know by now, we can see 20, 30, 35% pullbacks during a bull market, and it being nothing outside of Bitcoin's typical nature. So seeing a 17% pullback isn't a big concern for me. We do know that it has the ability to go lower during these pullbacks. But I want to talk about whether it will this time around. Now, I've seen a lot of people saying because the Bitcoin ETFs are here, we will not see pullbacks of a significant size. The week after the ETFs had been created, TF, no, it has not been discussed today yet. It will be later on in today's stream. So since the Bitcoin ETFs were created, we did have already seen a 22% pullback, and this highlighted for me that the pullbacks have not just been removed from the market. We are still going to see them. That's how the markets work. That was just a nice key factor to highlight there, and we have now seen a 17% pullback as well. So is this the end of the pullback or not? Well, there are a number of factors to consider here. First of all, we are a month away from the Bitcoin halving. The Bitcoin halving is predicted to be in around the 16th of April on most calculators, but it does vary slightly. We're looking at around 25 days until the Bitcoin halving. Now, If we take a look at previous halvings, if we go back to BTC USD, if we go back to on this Bitstamp chart, in fact, it's going to be better if we go into dark mode for this. If we take a look at what happened around the second halving, you can see that we had a significant pullback here, and this goes from around $782 to $465, and that was a 40% pullback. Now this pullback happened exactly 21 days prior to the halving. So that was a 40% pullback 21 days before the halving. If we take a look at this time around, the third halving, this was because of COVID. So I want to avoid that, and I want to look at the pre-halving dump. Now, if we take a look here, you can see we did see a pullback of around, did I click on the wrong tool there? Let's try again. Let's reset that price scale. If we take a look at this, we did see a pullback of around 20% for the third halving, and this happened approximately 4 days before the halving. I mean, I could have counted that myself. 4 days before the halving, a 20% pullback. So we've had 21 days before and 4 days before, and we've had a 40% pullback, and we've had a 20% pullback. So if we take a look at what's been happening this time around, and we put our Bitcoin halving for around the end of April. In fact, let's get a Bitcoin halving countdown, which has the date on as well. That would be helpful. I believe the nice hash one does. Yep, here we go. So here's another countdown here, looking at around the 19th of April. So if we put that on around there, it might be where it already was, and we take a look at how long prior to the halving we saw the start of this pullback, we're looking at around 36 days, and that doesn't really fit the pattern, to be perfectly honest. We've seen 21 days before, and we've seen 4 days before. 36 days before does seem extremely early for a very bullish period of time. But it is possible that this could be the pre-halving dump, and we continue to see sort of consolidation at this price point for the next couple of weeks. But right now I'm looking at this price chart, and if we take a look at pullbacks in previous cycles, you can see that these pullbacks usually are quite wicky at the bottom. That's a technical term for it, wicky. And you can see that on the candles prior to a pullback kind of finishing and starting to see that upwards momentum continuing, we usually have a pretty strong and fast dump. So you can see that a number of times on the chart here, the last candle before that upwards trajectory, it usually has a really big wick to the downside. Now that's not certain every single time, but you can see how clear it is that it happens on these charts. Now if we take a look at what's happening right now, we've had pretty slow price action at this point. We've come down to these levels and we've consolidated at these levels. Now if we go back again, we're going to have to just switch through back and forwards very quickly on this chart here so you can see this in detail. You can see that we don't typically consolidate at the lowest prices in a pullback. So you can see here we had a pullback significantly, and then we had a bounce before having that last wick to the downside. We typically see strong wick at the bottom before moving back to the upside. Now we have had some pretty strong price action here, but the more we consolidate at these levels, the more fearful I get, because typically what we see is something like this, for example, where we come down in that bearish trend, lower highs, lower lows, and then we see one big wick before moving to the upside. But if we get some consolidation, a lot of the time it does mean that we are going to move slightly lower. So that is making me feel a little bit bearish. But what's making me feel bullish here is, like, look, we are now still 25 days away from the Bitcoin halving. Bitcoin has the potential here to say, do you know what, that's that pullback over. We've been in this pullback now for around 2 weeks almost. So Bitcoin has the potential to say, do you know what, that pullback's over. It's been 2 weeks. It's time to go to higher prices. And then when we get closer to that Bitcoin halving, we could see another dump. That's, I think, a possibility in this scenario. If we take a look at the previous cycle, and we take a look at the length of pullbacks, we were looking at around 2 weeks for a pullback. So for example, this is the first considerable pullback prior and post-halving in the previous cycle. And you can see here that this lasted around 31 days. Now, if we take a look at the next one here, this lasted around 18 days. Now, if we were to stay in this pullback until post-halving, that 31 days was the maximum that we just saw there. We're looking at around 36 days here, so it does feel a little bit long. And that's what's making me think maybe this isn't the pre-halving dump, and this is just a pullback, and then we'll move to the upside, and then we'll get another pre-halving dump. That's possible here. But I'm keeping a close eye on this because I do think that we have the potential to just consolidate at these price points until that Bitcoin halving does come. So I'm trying to, my personal strategy is that I'm dollar cost averaging in, because if we go lower, brilliant, I can bring my average price down. And if we go up, brilliant, because I dollar cost averaged in. And that's my favorite scenario in this game. That's how I felt. I can be the least emotional when it comes to my portfolio, and that is super important. Good morning, good afternoon, everybody in the live chat today. Thank you very much for tuning in. As always, I very much appreciate it. Let's take a look at what's going on here. So on the firm greed index, we are in the greed section at 75. That has come down from extreme towards the start of this month, so that's really good to see. Let's take a look at what's going on in the cryptocurrency news, though, because we've got some really interesting news here today. Lots to discuss. Let's take a look at what's going on here. Let's take a look at what's going on in the news here. So Bitcoin ETFs become hottest product in BlackRock Fidelity's repertoire of funds. So let's take a look. IBIT and FBTC have accounted for more than half of the year-to-date net flows for both companies in less than 50 days of trading. Absolutely insane to see this amount of attraction to Bitcoin ETFs. We all knew that these were going to be bullish products, but I don't think we had any... I mean, we all weren't bullish enough at this point. We all weren't bullish enough. If we take a look here, we can see the ETFs have become the most popular funds the two asset managers currently offer in less than 50 days of trading. The products were launched on January the 11th and have consistently posted record-setting numbers and generally outperformed the wider ETF market. The strong performance is evidence of Bitcoin's growing popularity in traditional financial circles, and we are seeing a 49-day streak here, with, according to the data, Bitcoin ETFs make up more than half of BlackRock's net inflows for the year, despite the company's large portfolio of 420 ETFs. And the Bitcoin fund has attracted double the capital of every other ETF offered by the company since its launch in January. So if we're taking a look at Fidelity's ETF here as well, that's accounted for 70% of Fidelity's year-to-date flows, attracting 5 times more capital than any other ETF in the company's lineup. So we are seeing here the two spot Bitcoin ETFs have also achieved a notable milestone for securing continuous cash flows inflows for 49 consecutive days, a rare achievement in the ETF market. So brilliant to see here. We are seeing this achievement places them 4th among active streaks, trailing only behind cows and calf, which have seen over 100 days of continuous inflows. But Bitcoin ETFs have not been around that long yet, so we'll see how this continues. So recent discussions have focused on ETF investor behavior, especially during market dips. Despite perception of ETF investors withdrawing during downturns, the actual movements in the market presents a different picture. So we are seeing analysts saying that recent assertions in the community, the ETF investors lack sophistication or resilience. He noted that the newborn 9 collectively received $1.2 billion over the past 5 days, even as Bitcoin prices fell by 8%. So there's kind of like a theory that Bitcoin ETF investors will buy, and then as soon as the market starts to dip, they have weak hands, essentially. But that's not what the data has been showing here, because we've seen $1.2 billion flow into the Bitcoin ETFs within the last 5 days, even though Bitcoin is down around 8%. The inflow contradicts the idea of mass withdrawals from Bitcoin ETFs and indicates strategic investment choices by ETF issuers. Now, this is one of the most important pieces of information that we needed to share here, because Bitcoin ETF investors, yes, they were buying up. Yes, they were causing all of that buying pressure. But I was a little bit nervous, because if Bitcoin ETF buyers can push the price up that significantly, how do we know they're going to react during a pullback? And what we're seeing here is they don't, on the whole, have weak hands, which was what was expected. Instead, they actually have been buying the dip and looking to support the price of Bitcoin. So the analyst has said that the GBTC has experienced outflows, and these actions primarily involve strategic exchanges by Genesis and did not signify a broader lack of confidence among ETF issuers. These movements were largely neutral in impact. He also pointed to historical data supporting the resilience of ETF investors. So in 2008, ETFs attracted $167 billion in inflows, even when the S&P was down 35%. So we do see resilience in Bitcoin ETF investors, and maybe we shouldn't be so cautious of these investors and their actions. A lot of us are very worried that if they can cause the price of Bitcoin to move that significantly to the upside, then they can do the same to the downside, myself included in that fear. But they are showing, look, we are experienced investors. We're not going to paper hand this. We're looking for the long term. Let's see what's going on in the live chat here. Peter Dell, meme coins. There's a lot of excitement in the space right now. A lot of people are looking for different meme coins on the Solana network. A lot of people are dabbling. When I look at meme coins, I'm typically just looking at them as a short-term play. I'm not investing in them. I'm holding on to them for the long term, but I'm not really a meme coin investor. So I kind of sit on the sidelines and watch that play out. It's pretty interesting, it's pretty exciting, but it's not really my forte or what I choose to trade. Crypto Cody says thoughts on short cycle. 100% possible. TF says short cycle equals could happen, won't be as good in terms of parabola. I think a short cycle, Bitcoin always takes the path of most pain, and I am concerned here that we have this bull market. We have already seen an all-time high, and that typically comes after a halving. So maybe the chart has shifted slightly to the left here, and I will be looking to take profits earlier than I had initially planned. Hopefully it does continue to grow and increase in price significantly over the coming months. But originally I was only looking to start to take profits towards Q2 of next year. I've brought that date forward because of the concerns there. And I don't want to be left holding the bag at the end of the day. So that's what my opinions are on it. I'm not saying yes, it's definitely going to happen, but I'm preparing my portfolio for that scenario. And I think that's the best thing to do. A lot of people think that when you are an investor in crypto or any asset for that matter, you have predicted what's going to happen in the future. Not entirely true. The best thing to do is position yourself for every scenario. I speak about this a lot on the channel because a lot of people don't talk about this. You can position yourself for multiple scenarios in the market, so you don't need to just outright buy or outright sell. You are never going to time the top and you are never going to time the bottom. The best thing you can do is position yourself for every scenario, so your portfolio can benefit from every scenario. That's why I always like to dollar cost average in and dollar cost average out, and that's why I like to start to look at when I can begin to take profits. One big mistake I made in the last cycle was that I was taking profits from altcoins and then just turning that into another altcoin investment. And over again in the bull market, it was brilliant because everything kept flying. But when the markets then start to dump, you have not really taken any significant profits. When I say taking profits, I'm talking about moving it out of cryptocurrency. So I am trying to dollar cost average in. I will be dollar cost averaging out of altcoins into Bitcoin over time, and then eventually I will start to dollar cost average out of cryptocurrency towards the end of this year. Start of next year is when I'm thinking best. And in that scenario, if this bull market is shorter, that's fine. I've taken some profits, and I mostly hold Bitcoin anyway, so I'm happy to hold on to that for the long term. And if it goes on longer, brilliant. I can take profits for a longer period of time. Let's take a look at what's going on in the chat here. Crypto Cody says, I'm almost wondering if we'll have a double top, a quick run up to 100, then a big sell-off, consolidation, then a run up breaking 100, heading to 150. I feel like I don't want to say this because obviously nothing is financial advice. This is all just my own opinions. But we have already touched the $73,000. Now in this run up here, we went from $38,000 to $74,000 in a very short period of time. This was around a 92% pump in about 50 days. Now, yes, we've seen that parabolic run, but Bitcoin can do a parabolic run for even longer than this. I feel like 100k isn't as far away as a lot of people are thinking, but we'll have to see. I can't say we're definitely going to hit it, but the amount of inflows that we're seeing and the amount of traction that Bitcoin is getting and the strength of the bullish momentum as we continue to the upside is very high. Jonathan says 100 then 150 is not a double top. It's not a double top either. That is very, very true. To have a double top, you need to have like similar price points there. 100 to 150 would just be a upwards, a bullish trend with a significant pullback in the middle. Let's take a look at what's going on here. TF says 100, you are not bullish enough. Let's take a look at what else is going on in the chat. DS Flat says Bitcoin Cash is halving in 10 days. Let's take a look at that actually. BCH USD, and let's pull this up and see what's going on. So this has been pumping pretty nicely within the last couple of days as well. This was consolidating around 236. It's now at $480. If we take a look at what happened to this in the previous cycle, you can see that it did have a pretty nice bull market. Maybe it didn't perform other assets, but it did have a nice bull market, pumping significantly prior to that halving. Now, this isn't something that we saw too much of in the previous cycle. Very, very interesting. I also want to take a look at proof of work Ethereum here and see what's going on there, because this has been pumping nicely within the last couple of days. This has seen significant growth. We were back in October 23, we were down at 1.2. We are now up at 3.9, so that is significantly moved to the upside. Let's see what else is going on here in the chat. Just as I am new to this, I just can't see how most crypto will go up over 5x. Sorry, lots of things going on in the chat today. Let's scroll back to the bottom here. Hello, Rob. Thank you very much for tuning in, as always. Jonathan said it would be a higher high. It would be. Peter Dell says, I trust my shares more than this crypto game, and I believe shares are safe. Well, we all have the typically Bitcoin and cryptocurrency is seen as a riskier asset class. I honestly, I can't give any advice on that. There are different ways that you can invest and you can trade. Cryptocurrency is a brilliant tool. Historically, it has made people lots and lots of money, but we have to remember to take profits, and that is the most important thing that a lot of investors miss in this game. I've seen lots of conversation about this on crypto Twitter in the last couple of weeks, because there's a stupidly high percentage of people that make a lot of money in crypto and do not take any profits. You have not made money until you take profit, and that's what we find really difficult in the crypto space, because when things are going up, and it's absolutely crazy. So making sure to take profits in this cycle is one of the most important things. Let's take a look at what else is going on in the next in the news, though, because we've only spoke about those Bitcoin ETFs. Let's take a look at what's going on in this next article. We have a crazy price prediction from Cathie Wood. So she has said, look, we were looking at $1.5 billion for Bitcoin as institutional exposure looms, but this could increase at even higher. She said in New York on March the 22nd, since the SEC gave institutions the green light to Bitcoin, if they were to allocate more than 5% of their portfolios to Bitcoin, as we think they will, that could add $2.3 million to the $1.5 million price target we initially gave. So, the firm's revised outlook suggested a potential surge in Bitcoin's price beyond the $1.5 million mark. This aligns with broader expectations for its integration into the global financial system. And we are seeing here this stance builds upon Wood's earlier predictions, notably her assertion in January that Bitcoin could ascend to $1.5 million by 2030 in a bullish scenario. This was shortly after the US SEC approved the first spot Bitcoin ETFs, a move Wood hailed as pivotal for mainstream Bitcoin adoption. Wood has long been a proponent of Bitcoin's growth potential, having previously set an ambitious price target of $1.5 million. She's now looking at $3.5 million, saying, look, if these institutions put 5% into their 5% of their assets in portfolios into Bitcoin, we could see a massive move to the upside. Also, when we're looking at this, she has suggested that the pathway to surpassing $3.5 million is mathematically plausible. Now, Wood also emphasized the rising significance of Bitcoin, particularly in emerging markets amid the global economic fluctuations spurred by heightened US Federal Reserve interest rates. Bitcoin's performance as a hedge against economic uncertainty is further highlighted by its surge during the US regional banking crisis back in May 2022. And we are seeing Wood's vision for Bitcoin transcends its current status, seeing it as a cornerstone in the future financial landscape, especially as it gains traction as a risk mitigation asset in volatile economies. Her forecast, bolstered by the advent of Bitcoin ETFs and the digital currency's innovative attributes, sketch a future where Bitcoin challenges traditional investment paradigms and offers a new blueprint for financial stability and growth across the globe. So, very bullish price targets here from Cathie Wood. Really interesting to see this amount of bullishness in the markets right now. I try and keep a cool head in scenarios like this because Bitcoin has been pumping significantly. I don't want to fall into an up-only mentality, but we are bullish here. We've seen a nice little pullback. We are ahead of the Bitcoin halving, where Bitcoin's inflation rate is going to cut in half. Instead of seeing around 900 Bitcoin getting mined per day, that is going down to 450 Bitcoin per day. We are still seeing inflows into Bitcoin ETFs. The ETF buyers seem to be buying the dip. We've seen a huge amount of inflows, even though the asset is down 8% right now, and we are seeing continuous bullishness across the market. So it's definitely a good thing here. Now, before we continue on to the next article, please don't forget to like, subscribe, and press that bell notification button so you don't miss the latest cryptocurrency news. We've got almost 40 people watching the stream on YouTube right now. We've got hundreds watching on Twitter right now. So if you are on Twitter, make sure to come over to YouTube. And if you are on YouTube, make sure to hit that like button so you don't miss the latest cryptocurrency news. Let's take a look at what's going on in this next article. So BlackRock sees Bitcoin as integral part of financial system, little interest in other cryptos. So this article is saying that essentially the asset manager's head of digital assets has said, eventually we expect there will be a convergence where the best of the old system and the new technology will be confused in a new infrastructure system in finance. He has said that the company's clients have minimal interest in crypto behind Bitcoin and Ethereum, when he said Bitcoin is overwhelmingly the number one priority for clients, while Ethereum receives a little bit of priority and other cryptos see very little interest. He added that the company is not focused on other digital assets, despite the crypto industry's desire to see a long tail of such products. So we're saying here, look, people are interested in Bitcoin, a portion of them are interested in Ethereum, and an even smaller portion of them are interested in the greater cryptocurrency space. There's been a lot of development within the cryptocurrency space, trying to build utility on blockchain technology within the last 10 or so years, and I do see the development of this continue. We have seen BlackRock put some money into a fund, $100 million into a fund to start tokenizing some assets looking to utilize blockchain technology. So I do still think there's a lot of, there's high expectations and a lot of promise for how this technology can be used in the future. So my interest is still in the greater cryptocurrency space, not just in Bitcoin and Ethereum. But with these traditional investors, I expect this. I expect Bitcoin and Ethereum to be at the forefront for them. Let's take a look at what else is going on in the cryptocurrency space. Please don't forget to like, subscribe, and hit that bell notification button so you don't miss the latest cryptocurrency news. Let's see what else is going on in the live chat here. What's going on here? Good morning, Rob. Thank you very much for tuning in. As always, DS Flat says Bitcoin is expensive, doesn't scale on chain. Bitcoin Big Block is scale on chain. They're cheap to transact and share the same Genesis block. Jonathan says, I think I'm giving away CSE Plus secrets. What CSE Plus secrets are you giving away? You've been in the CSE Discord. If you have not joined the CSE Discord channel, make sure to do so. You can go to cryptosavingexpert.com, and when you join CSE Plus here on the website, you get access to the CSE Discord, and we all talk about what's going on in the cryptocurrency space. That Martini guy is active in there, messaging about what he thinks is happening. We've got lots of experienced traders in there as well, and we do weekly calls with those in the premium channel, where we have basically a Zoom call with that Martini guy, and anybody can ask any questions they want to, and we have a call every other week with the community members, the CSE Plus members, CSE Plus community members, where we have those conversations as well. So if you're in premium, you get access to 3 every 2 weeks. If you are a community member, you get access to 1 every 2 weeks. So make sure to join if you have not done so already. Let's take a look at what else is going on in the news here, though. So Ethereum risks losing its $3,000 support as ETF optimism fades. Again, we are still seeing a lack of activity between the Ethereum ETF issuers and the SEC. This is not the same as what we saw when the Bitcoin ETFs were waiting to be approved. In that scenario, we were seeing a lot of conversations being had, lots of amendments being made to the filings within the SEC, and we have just not seen that here, unfortunately. So the likelihood does seem to be dropping. We did also see Fidelity, I think it was Fidelity, change their filing just last week to add staking into their ETFs. So they want to stake their Ethereum within the ETFs and earn interest on their Ethereum, maybe to reward a portion of that back to investors. Added a whole new complexity to that ETF. We did also see the SEC last week begin begin some sort of action to try and label Ethereum as a security. This goes against what the CFTC say, because they say it's not a security and that they should regulate it. Opened a massive can of worms last week, so as that is continuing to spread, we are seeing the ETF optimism fade for Ethereum, unfortunately, and with that we are seeing it be outperformed by Bitcoin continuously within the last couple of weeks on the whole. We did see a slight move back to the upside, but we are starting to see that pull back down again. On the Ethereum chart, if we go to USDT and we take a look at what's been happening here, you can see we have had a significant pullback here as well. From the yearly high, we are down around 15%. Ethereum has not yet reached its all-time high. Its all-time high is as high as just below $4,900. We are currently down $3,450. So for Ethereum to get back up to that level, we would need to see a 40% increase. I've highlighted this before, but if we take a look at what happened in the previous cycle, Ethereum created a new all-time high on the, let's get a line across here so we can see what's going on here. Ethereum created a new all-time high in the previous cycle on the date, which was, and I mean a significant all-time high, on the 2nd of February 2021. Now, if we take a look at Bitcoin and we pull this up, the 2nd of February 2021, let's not forget this, the 2nd of February 2021, if we take a look at Bitcoin, then we knew that this created a new all-time high, a significant one, on the 16th of December. So 2nd of February 2021, let's get this in here. That's when Ethereum made its new all-time high, and Bitcoin really made it on the 16th of December. So there were around 48 days between Bitcoin creating a new all-time high and Ethereum creating a new all-time high. So 48 days is what we're looking at there. If we take a look at what's happened this time around, and we go to the horizontal line and pull this across, you can see that Bitcoin has made a new all-time high on the 11th of March. If we are still looking at the same time frame, we could be looking at around 48 days, the end of April, for Ethereum to make an all-time high, if that time frame is going to be the same. I'm a little bit cautious that maybe this won't be, because this was such a short period above the Bitcoin all-time high, and maybe we need to have some more consolidation and then try again, and then look later down the line for Ethereum. That is my view now, since we've seen this pullback. Prior to this pullback, that's not how I felt, but that is how I'm feeling now. So I'm being cautious, but I'm still being bullish on Ethereum and still have my fingers crossed that we will see a new all-time high this year. Let's see what's going on here in the live chat. Kevin Stone says, hello everyone, good morning from good old US of 8:45 a.m. here in North Carolina. I have family from North Carolina. Hope we have a pump this week. Alt season, where you at? Haha. Alt season is being slow. I don't think we're in it yet. I really don't think we're in it yet. Somebody has said, Gregor says, let's take a look at the CME gap here. So let's pull this up and see what's going on here. CME gap, nothing to really be concerned about. The CME is the Chicago Mercantile Exchange. This is an exchange that is operational every Monday to Friday. When they close on a Friday, they just pause this chart and then they open it again on a Monday. And obviously, because Bitcoin is volatile over a weekend, it leaves a gap on the chart, and that gap acts like a magnet for the Bitcoin price until it is filled. Now, for a gap to be filled, what we need to see is price action within that price range after the gap was created. So for example, we've got a clear one here. We had a gap here, so this was the price on the close of for the weekend, and this was the price for the open for the weekend, and there was a gap. Now to fill that, we needed to see this price action here. That gap is now no longer acting like a magnet for the Bitcoin price. If we take a look at what happened down at $20,000, we created a gap, and we have not filled that gap because we've not seen price action within that price range post gap. Now that is acting like a magnet, but it's not something that we need to be concerned about. If we take a look at this gap, for example, that has been filled, we've seen the price action there. If we take a look here, you can see that the wick from this candle went higher than the bottom of this candle. So we have not created a gap for this weekend, and therefore nothing to be concerned about. No new magnets to keep an eye on. Gregor says, what about the 4-hour and the 1-hour chart? Yeah, you can look at them, but we're looking at the daily chart because this is the CME gaps. Now you can see that there is a gap here, but I mostly go off the daily chart when I'm calculating this because those wicks were big enough to fill that. Let's take I check the daily chart when I'm looking for those CME gaps. Let's take a look at what else is going on in the cryptocurrency news here, though. So we have seen the Ethereum price having a little bit of a pullback off the back of the Ethereum ETF optimism fading slightly. If we take a look at what else is going on here, we can see Solana outshines other blockchains, captures nearly 50% of crypto investors' attention. So we're seeing a lot of activity on the Solana network right now. We're seeing meme coins go absolutely crazy on that network. A lot of people are super bullish on this network. We've seen meme coins fly super high. The transaction fees are competitively low. They are fast. It's a brilliant platform to be having all of this activity on, and has been performing incredibly well. If we take a look at the Solana price here, let's pull it up. Sol USDT. You can see it's been performing incredibly well. From that high on the Solana blockchain, we are down around 10% here, but this has increased significantly, and it's been on an absolute tear to the upside. It's been absolutely insane. Let's take a look at what else is going on here. We've got Avalanche Foundation announces Meme Coin Rush, a $1 million incentive. So the announcement comes just months after the foundation pledged for $100 million to community tokens. The Avalanche Foundation has announced Meme Coin Rush, a liquidity mining incentive program. The pledge is one of many commitments the foundation has made to drive users to the chain. The foundation stated that the initiative aims to scale liquidity and drive momentum for AVAX meme coins. We've actually seen this quite a lot for a lot of the different decentralized application projects like Ethereum, like Avalanche, like Solana. We've seen a lot of the underlying projects creating incentives and putting funds towards getting projects to build on the platform. So really positive to see here for Avalanche, because it does attract project developers and therefore creates some utility on the blockchain, whether it's a meme coin or not. It creates some activity on the blockchain, and that's positive for Avalanche, because these projects want to see higher transaction volumes on their networks. Let's continue on to see what's going on here. So why anonymous crypto wallets are not being banned in the EU. I want to talk about this a lot. Kevin Stone says in the chat, meme coins, I just can't. This is my third cycle and I still can't. 100% agree with you. I'm going in for the short term if I'm investing in a meme coin, but there are some opportunities there, and I keep seeing a lot of people making a huge amount of money while I stand on the sidelines here. Let's take a look at what's going on. Jonathan says, how much does the timing of the Ethereum all-time high respond to the Bitcoin all-time high, and how much does it depend on its own news such as deflation metrics and other upgrades? I mean, Jonathan, I actually believe that that obviously we can't be sure, but I think there's a much bigger correlation when it comes to the Bitcoin price and Ethereum than to its upgrades. Yes, Ethereum can have nice small pumps off upgrades and things like that, but those kinds of things don't affect Ethereum in the short term like it does smaller altcoins. When it comes to an Ethereum all-time high, we do see a really strong correlation between Ethereum and Bitcoin. Yes, it will be affected by what happens with the Ethereum ETFs. That could dramatically change the timeframes that we are looking at. Obviously, I was only looking at one metric then, so it's not something that we can be dead certain by. But it's just good to consider that, look, Bitcoin's created new all-time highs. We're looking at higher prices. The Bitcoin dominance is still very strong. Jonathan says, true, they are usually anonymous. They are really, to be honest. But when we see Bitcoin creating new all-time highs, we can start to be bullish at what else is going on in the markets. As I always say, typically with the crypto space, we see Bitcoin perform really well, then the high caps perform really well, then the mid caps, then the low caps. Right now, I do believe that we are still in this Bitcoin section. We have seen some altcoins have some really good periods of time, but Bitcoin has been performing incredibly well, holding on to its dominance incredibly well. When we see the Bitcoin dominance start to cool off and move to the downside, that's when we're seeing the altcoins explode, and that is why I don't actually think we have hit altcoin season right now just yet. And that's why I'm still loading up on some of my altcoins as well. Let's take a look at what's going on in this article though, because I know we all want to discuss this. We've seen a lot of news over the weekend on what's happening in the EU when it comes to crypto wallets. And I wanted to pull up this article of why anonymous crypto wallets are not being banned in the EU. So this conversation was sparked by an article that was originally titled "Anonymous Crypto Wallets Now Illegal in the EU." So let's take a look at this. The blog post by a member of the European Parliament has triggered all of this conversation. And what we have essentially seen is some restrictions on transactions within the EU. So we have seen already Anonymous cash payments over €3,000 in commercial transactions will be banned under the new regulations, and cash payments over €10,000 will be prohibited entirely in business transactions. Additionally, anonymous crypto payments to hosted wallets will be banned without a minimum threshold. So a self-proclaimed digital freedom fighter from the Pirate Party voiced strong opposition to the new laws in his post. He argues that prohibiting anonymous payments would have minimal effect on crime while depriving innocent citizens of their financial freedom and privacy. So he points out that dissidents like the late Navalny and his wife and organizations rely on anonymous donations in virtual currencies to fund their activities. He's concerned about the potential consequences on the EU's war on cash. He warns that crippling abolition of cash could lead to negative interest rates and increased dependence on banks. So we are seeing payments to anonymous wallets are banned from exchanges. So the EU Director of Strategy for Circle has sought to clarify what he believes to be misinformation surrounding the new regulation. A former MEP staff member reported regularly on EU legislation before joining Circle and has shown a comprehensive understanding of the policy. They emphasised that self-custody wallets and payments to from these wallets are not banned under the new regulations, and peer-to-peer transfers are still explicitly excluded from the regulation here. So that's super important here, and this is the key point that I think has been missed. There's been a little bit of misled information spreading. What's what I'm trying to say? There's been a lot of false information spreading on cryptocurrency Twitter. We haven't really seen some people with deep understanding going into detail on this. Obviously, I'm not an EU regulation expert. As Raven says in the chat, there's been a lot of panic around this topic, but this is somebody with experience in the space, somebody who was a former MEP staff member and is now working at Circle, which is the issue of USDC, saying, look, the self-custody wallets and payments to and from these wallets are not banned under the new regulations. So peer-to-peer transfers are also explicitly excluded from this regulation. They have acknowledged that paying merchants with crypto using a non-KYC'd self-custody wallets will become more difficult or banned. But he said that the regulation applies only to obliged entities and service providers, not providers of hardware, software, or self-custody wallets that don't have access to or control over the crypto assets. So under the new regulation, crypto asset service providers such as exchanges will be required to follow standard KYC AML procedures and be prohibited from providing anonymous accounts or accounts for privacy coins. So I hope this kind of puts a little bit of water on the fire. There's been a lot of panic around this, as Raven says in the live chat there. I'm going to drop the link to this in the chat. I've gone over the key points here because I did read through this article before today's stream, and I just wanted to pick the key points out because I know it's not a topic for everyone, but it's been really kind of spreading like wildfire on crypto Twitter over the weekend, and I just wanted to cool that off a little bit. If you want more detail on that, make sure to check out that article. But if not, we will be moving on to the next one now. Before we continue, please don't forget to like, subscribe, and hit that bell notification button so you don't miss the latest cryptocurrency news. We've got 2 articles left, and then I need to rush off this stream for a 1 p.m. call. So let's take a look at this one. How are Bitcoin miner stocks performing? They're having varied performances here so far. So we are just 25 days away from the Bitcoin halving, where their income will essentially be slashed in half when it comes to their Bitcoin value. So Bitcoin miners were mining around 900 Bitcoin per day. We are looking at that being halved to 450 Bitcoin per day within the next 4 weeks when that Bitcoin halving happens. So they need to be prepared for that, and their mining stocks will fluctuate off the back of this, as it typically does. It's all part of the excitement. It's very bullish for Bitcoin to see this halving because we are seeing the inflation rate being slashed in half, and we all know how supply and demand works. But when it comes to the mining stocks, we do see some varied results in the markets. I will drop the link to this in the live chat if anybody is interested to take a look at that. Let's take a look at what else is going on here. So token red flags. This is actually an article I didn't want to go through on the stream. I just wanted to highlight this for you to take a look at because I know a lot of you are looking at different altcoins right now. And this goes through the tokenomics, the team, the utility, the liquidity, and the factors you should be looking at before investing into an altcoin. So make sure to check that out when you're learning how to do the best due diligence for your portfolio and make sure that you are investing in solid projects. Let's take a look at the Bitcoin price before we close off today's stream. As I said, I do have a call in just a couple of minutes, so we do need to be really quick here. Overall, though, Bitcoin did have a nice pump over the weekend, which is typically pretty unusual. On the 1 hour chart, we are in a nice little uptrend there. In fact, let's pull up the MACD and the RSI and see what's going on here. Let's go RSI. Do we have RSI? Here we go. So you can see that I'm gonna pull this off for a second. You can see that the bullish momentum on the daily chart is starting to weaken according to the MACD. The RSI isn't incredibly overbought anymore, like we were seeing at those higher prices. If we go into the smaller time frames, we can see the RSI is pretty neutral throughout. On the 1 hour time frame, we're looking like bearish momentum is increasing slightly, and on the 2 hour and the 4 hour looking like bullish momentum is decreasing. So maybe we're in for a little bit of consolidation before the next big move, but that's all we have time for today. So thank you very much for tuning in. As always, I hope you have enjoyed. Please don't forget to like, subscribe, and hit that bell notification button, and I will see you back here tomorrow with another crypto news update. Thank you very much for watching, and goodbye.